As an influencer, you have very specific write-offs that you can be using inside of your business to save you a little bit of money at tax time. But what things qualify as a write-off and what does not? Today, we're breaking down everything you need to know with professional CPA Christy Bowie, who is going to let you know what does and does not work and best resources for making those decisions. Let's jump in.
Hi, I'm Christy. I'm a CPA and financial consultant for influencers, content creators, and business owners. And I focus on helping you make sense of your financials and your taxes.
Today, we're going to be talking all about write-offs for influencers, which I'm really excited about because I know there's a lot of questioning in the industry about those write-offs. So before we dive into that, what exactly is a write-off? Can you define that for us?
Yeah, so if you hear the words write-off or deduction or expense, those are really all the same thing. So basically, a write-off or a deduction is something that decreases your taxable income. So when you have income, say a brand pays you $2,000 for something, but you spent $500 getting, all the materials and software or whatever, your write-off is the $500, and instead of paying tax on the whole $2,000, you can decrease that by the expense, and your taxable income is then $1,500. So you're paying tax on that lower amount. So that's why we say you write it off your income, because it's not included in your income. And something that I always like explaining to people, because there's this misconception that when you write something off, it's free. It's not. A write-off is a coupon. The amount you save is just the amount of tax you don't pay on it, but you still physically purchase the product. So the amount you're saving is kind of the net in the taxes. So I always advise people, we never write anything off just for taxes. You make a business and personal decision, and then we will look at the tax impacts of that later. But we do not let tax drive decisions.
I love that. So when it comes to creating these write-offs in our business, what types of things should influencers be paying attention to? Because there's a lot of questions on, does this work and does this work? And I know it's one of those situational things. So what do we need to know about that?
Yeah. So first off, I just want to say this is one of the most underserved communities on what is the impact of these. And particularly that's because the rising of this as a profession is a more recent occurrence, and none of these instances have actually gone through the tax court yet. So we don't have super definitive answers. I do expect there will be some in the next few years, and they will be making an example out of someone. So I just want to make sure that you guys know everything that you are required to do to make sure that you are at least as compliant as possible. So the first thing that you really need to understand is what the IRS says is a business write-off is anything ordinary and necessary. So I know that's extremely vague, but that is basically the oversight that even we as CPAs have guidance. And we have to make sure that we can determine that what you are doing is ordinary and necessary. So there's kind of a two-step process that I like to walk my clients through. The first question is, are you only doing this because you have a business? So would you be doing it otherwise? Would you, basically, is it something that is normal in your everyday life? So it just kind of happens that you also have a business. And then the second one is it a normal, ordinary, expected part of operation? So this is kind of where we get a little bit gray about like what is normal for an influencer. But kind of thinking through, like, is it necessary to perform your job? And I also use this phrase to kind of think when we get a little bit more specific in, clothing or whatever, is this asset used to generate income? Or is it a normal part of operating? So, when we think about a camera, a new camera, yeah, that asset is used to generate income. Or if you think about me, a CPA, well, no, I'm not used to generate income, but I am a normal and expected part of business. So those are kind of the things you need to be thinking about.
That makes a lot of sense. And one of the things that I deal with a lot is that I work with people who do have very specific things for their business. So an example I love to give is that I work with the professional mermaid community, and they have very specific outfits. Now, if it was something they could wear out whenever, that's probably not something that they could be writing off. But because they have very specific tops that you don't wear in public outside of the mermaiding community, that is something that they could write off. So in general, when it comes to clothing or apparel, we have to be very specific and talk to our CPAs about it, because sometimes it does work and sometimes it doesn't work. Do you have advice on that?
Yeah, so there is a very specific tax court case that most CPAs kind of reference to get guidance for this. It is basically a case that told us that a TV and media professional was not allowed to write off their haircuts. And it's because they said, hey, I'm allowed to. This is part of my job. I'm on TV and I'm in the media. And the court basically said, well, no, because it's a normal haircut, right? Like if you were getting something crazy for a TV show, that might have been a different story. But it was a normal trim and it was a normal thing that they would have done anyway. So it wasn't simply because it was part of the business. So that is really the biggest guidance we as CPAs have on making something personally expenses, making that a business expense. So that is kind of the legislation we look to for anything such as clothing. Like, is it specific enough that you absolutely need it for this job? Or another one I hear a lot is nails. That's something people are like, well, my nails are on screen a lot. Like they need to look good. And it's like, well, yeah, it'd be great if they look good, but is it technically a requirement? Probably not. So one thing that I have seen is influencers and content creators having brands write these things in the contracts. If you are saying, well, I think I'm filming something, I'm holding it on screen and my nails need to be done for it. Okay, if the brand writes that in the contract saying your nails need to be done in a pretty French manicure, whatever, then yeah, that makes sense that it's a ordinary necessary business expense because it was required to generate the income. But if it was kind of just like, well, my nails are kind of on screen, so I want that to look nice, then probably not, because you would be doing it anyway. And there's a really, thin line we have to walk. We can't just say everything personal is now a business expense. And that's something that is really hard to do as an influencer, especially, when you're a lifestyle influencer, you're saying, well, my whole life is my content. Yeah. But there has to be some boundary there.
So when it comes to creating those boundaries, we know we have to be able to prove what we want to write off was really specific to a business decision or a business something that we have done. What happens when we are creating these boundaries? Like, what do we need to know to make sure we are staying on the right side of this?
So first of all, I'm going to tell you something that is probably going to make a lot of you feel a lot more calm about this situation. If you write off something that the IRS disagrees with, you are not going to jail. You're not going to jail unless it's absolutely egregious and fraudulent. Most likely, the IRS is going to come back to you and they're going to say, hey, do you have proof of this being an expense? And you say, here's my proof. And they say, hey, we don't really agree with that. We actually think you need to go back and you need to pay us those taxes with a little bit of penalties. And you say, okay, and you pay it and you move on with your life. So unless you are just being absolutely egregious and saying, everything in my life is this, and they can tell, and your CPA can tell what is egregious and what is aggressive. So that is something I always like to tell people. And when I do have clients who are more comfortable sustaining an aggressive position, I say, hey, just so you know, the IRS could come back. I don't know what the IRS is going to say. I have seen the exact same situation rule different ways in the IRS, in an IRS audit, and it's just who's doing your audit. It's kind of situational and how good of a mood they're in that day. So if it's anything more aggressive, I tell my client, hey, let's take this money that we were going to owe in taxes and let's put it aside for, a year or two and just make sure that if they do come back, we know that we have the resources to pay the money if they want. And the other thing I always tell clients to think about is some people are really, really anxious about the IRS, and I completely understand that. But if you would literally not be able to sleep at night, being worried that, the IRS might say this is disallowed, or if you would break down in tears if you got a letter from the IRS, then maybe don't be as aggressive, because your peace of mind is the number one thing I care about. I would rather have you pay a little bit more in taxes and be able to sleep at night. Like my goal for any client, I don't promise none of my social media, none of my website, anything. My promise is not you will pay the least in taxes. And I don't believe it ever should be. It is, you will have peace of mind, but also know I'm reducing your taxes.
Which is incredibly helpful. And we've been talking a lot about documentation. So anything else we need to know in terms of documenting things to make sure we have that proof and we can show that what we are claiming as a write-off really truly is?
Yeah, so some of the things that I would recommend you taking extra note of documentation for, first off, just good practice. I have QuickBooks for my business. I have the QuickBooks app on my phone. Anytime I buy something, I get a receipt, I scan it or take a picture of it in QuickBooks, and I move on. It's categorized with the expense. So that is always really good. Technically, you do need receipts for most things. Obviously, in this like super paperless age, and we don't always keep up with them, it can be hard. But I would say the documentation you really need to be careful with is, the first one is meals. So if you go eat with someone, so I have a lot of friends who are CPAs. If I go, have a meal with a CPA, first of all, if we talk about CPA things, that can be a write-off, because I am networking, I am having education, I am working with someone else in my industry. So that is a really good thing to be aware of, especially if all your friends are in your same industry. It's super helpful. Again, don't get aggressive, but I meet with other CPAs once or twice a month, and that's a write-off. So when you do that, you just have to know that when you are deducting meals, you want to document who was there, what was discussed, and what was the business purpose of it. So for me, okay, X, Y, and Z CPA were here. We discussed taxes for content creators, and the business purpose was for us to educate each other on our thoughts of it. So that is something that you want to be really careful to document all of those facts for. And again, if you have a software like QuickBooks or whatever, you can either write on your receipt and take a picture, or you can write it in the notes. So you can be saying, hey, like, this is, you're not going to remember at tax time. So go do it as you go along. That's a big one. And then also mileage. If you are driving somewhere to take a shoot for a brand and you want to deduct those miles, which you should be. I also have another app on my phone. I think QuickBooks does this as well. I have an app called Everlance that can track my mileage. So when I get in my car, I click a button, I say start. And when I get to my destination, I click a button, I say stop, and I say, this was a business trip. So I document the number of miles I drive. And then at the end of the year, I multiply it by a standard mileage rate. And that's the amount I get to write off on my taxes, because the IRS has said, okay, we will, for every mile you drive for business, we will say it is, this much of a deduction. So meals and mileage are two of the ones that I would pay extra attention to, especially because those are kind of like bonus deductions. Like, it's great to be able to write off things that you are already doing, but there's a business purpose for.
That makes a lot of sense. Are there any trouble areas that we need to be paying attention to?
So I would say, obviously for influencers, things like clothes, makeup, hair, that is just a really gray area. Again, I have clients who are really comfortable saying, you know what, I would be comfortable defending this to the IRS. And if they disagree, that's okay. So basically anything that could be considered personal use is really where you need to watch it. Also, I think another one that has been thrown around on social media as like an end-all be-all is a home office deduction. That is a great opportunity, but you have to be really, really careful, because for a home office deduction, you have to have a dedicated office space in your home, and it has to be used exclusively for work. And you also can't have another pay rent. So I pay rent for an office space. I couldn't then also say, well, I pay this rent, but also I have a home office. It's like, no, you work in one or the other. So you have to make sure that you are following all of the rules. And again, this kind of goes what we talked about in a previous video about not just listening to everything you hear on social media, and making sure you know all of the rules for it.
And if you want 10 of the most important tax tips for influencers, make sure you hit up that video. We'll link it down below for you, because we had a lot of really great content in there as well. Christy, is there anything else we need to know about write-offs for influencers?
Yeah, the biggest thing is really just making sure you are staying on top of it. The other thing I kind of want to throw in here is a lot of influencers think that they can just be tracking this stuff on a spreadsheet, which is fine to an extent. But I would highly recommend making sure you have actual bookkeeping software, either or a bookkeeper, a CPA, somebody helping you with this. Because if you genuinely want to make this a business and take this full time, you need to have financial statements later on in your life. If you want to rent a car, if you want to, or buy a car, if you want to buy a house, anything like that, these deductions you take in the financial statements you keep are going to matter to the rest of your life.
Fantastic. Where can everybody find you online to connect?
Yeah, so my website is christybowie.com. It's just my name. And on my website, I have a list of freebies that you can kind of look through, as well as all of my services and something else I have called the membership, which is a group community based on education and making sure you are compliant with all of your tax deadlines. So that is where you can find my website. I'm also on Instagram and TikTok, and my handle is @It's Christy Bowie.
If you have not checked out Christy's other episodes, make sure you do. We'll link those down below, and make sure you hit that subscribe and notification bell, because we want to keep you in best practices when it comes to your influencer business, and to give you tips and tricks to make more money inside of your platform in a faster way so that you can get back to running your business and living your best life while having a highly profitable influencer platform. Drop your questions down below and follow along for daily videos on how to level up on the different social platforms, tools and resources you're going to need, and breaking news so that you stay ahead of the game and know exactly how to pivot on the social platforms to get seen more.